gentlemen, good day and welcome to the Q1 FY'25 conference call of Bansal Wire Industries Limited. From the management, we have Mr. Pranav Bansal, MD, and Mr. Ghanshyam Gujrati, CFO, to take the discussion forward. We also have an investor relations team from Adfactors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please press star and 0 to signal an operator on your touch-tone telephone. Before we begin the earnings call, I would like to mention that some of the statements made during today's call might be forward-looking in nature, and hence it may involve risk and uncertainties, including those related to the future financial and operating performance. And now, hand over the call to Mr. Pranav Bansal for his opening comments.
Hello and good evening, everyone. I am delighted to speak to you all for the first time post our successful listing. I hope you all have gone through the results, press releases, and the investor presentation, which are available on the stock exchanges and our website. I would like to discuss at a macro and industry level before we dive deeper in the performance of the quarter, after which we shall have the forum open for Q&A. So for the investors, the new investors of this call, I would first like to brief you a little bit about the company. So today, Bansal Wire Industries Limited, today we are the second largest steel wire producers and the largest stainless steel wire producing company in India. We have a total of 5 manufacturing facilities, 3 of which are in Ghaziabad, 1 is in Bhabibad, and the 5th is the single largest manufacturing facility in Asia, which we have just started in this quarter. So we have over 3,000 SKUs that we sell to more than 5,000 different customers. As far as our vertical goes, we operate in 3 main verticals: high carbon, mild steel, and stainless steel wires. We cater to almost 5,000 customers in various industries like automotive, general engineering, consumer durables. And we're exporting to about 50 plus countries, in which the main export lies in US and Europe. Now coming to the first quarter. The first quarter, I would say, has been a very crucial quarter for the whole country as we voted for the new government, because of which I feel that we have seen a renewed positive sentiment overall in the market. Today, because as a company, I would say we are a backbone to any industry there is, whether it is automotive, infra, agriculture, and all of these industries have seen good results and good pick in demand. Therefore, for us, the future is looking bright. As a whole, I would say that we have done a little better than anticipated in the last quarter, and we are hoping for similar and better results in the future as well. So for the first quarter, our company reported an 82% jump in net profit to about 31 crores, 49% jump in revenue to about 817 crores, while EBITDA increased by 127% to 62 crores. Our EBITDA margin also rose by 260 basis points to 7.6%, and PAT margin grew by 70 basis points to 3.9%. I would like to conclude here, and we can open the forum for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deep Mehta, Bank of India Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for a very good set of numbers. My first question is slightly bookkeeping in nature. If you can help me with the volumes or sales which we have done for Q1 of this quarter, of this year.
Yeah. So overall, as far as volume goes, we have done about 140% increase on a year-on-year basis in all three streams, high carbon, MS, and stainless steel combined.
Can you help me with the absolute number of volumes, if it's possible?
Yeah. So the absolute number of volumes that we've done is 76,000 tons. Close to 76,000 tons.
That's very helpful, sir. And my second question is regarding our Dadri facility. What has been the progress in commissioning of the plant? How much of the plant has been commissioned, and how should we look at its ramp up for the full year?
So, sir, in fact, out of the 76,000 tons, about 6,000 tons has come from only Dadri. So, in fact, our Dadri ramp-up has done a little better than expected. By the quarter end, we have closed at about 13% kind of a utilization already. And every day, I would say, we are adding capacities and we are ramping up capacities. So we see an increase in sales happening on a daily basis from Dadri. Looking at the current number, I am sure that we will surpass all our estimates that we created for the year.
That is very helpful, sir. If you can help me with the absolute capacity which we may reach by the end of this year for Dadri facility.
So, sir, as far as capacity goes, the whole company will now have about 6 lakh tons of installed capacity by the end of this year, from the 2.5 lakh tons that we had last year. So about 2.5 times capacity jump will be there by the end of the year.
That's very helpful. And my last question is regarding our initiatives for adding various value-added products. If you can help us in understanding the progress on each of these projects which we are trying to execute.
So we as a company have been adding new products almost every month, and we continue to do so. The main focus for us, as far as margin expansion goes, will be by adding the fourth vertical of specialty wires, which is also set for third quarter of this year. And I would say everything is on track. We are delayed by about a month because of some imports from China because of container availability. But otherwise, within the third quarter of this year, we would start our production in specialty also. And we are looking at a quick ramp up of that product as well. With that being said, already our high carbon wires and stainless steel wires and mild steel wires, we have already tried to increase a higher margin products portfolio in all three segments.
Thank you, sir. That's all from me. Good luck.
Thank you very much. The next question is from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, Pranav. Good evening. My first question is on the licensing arrangement with Bansal High Carbon and Balaji Wires. If you could provide an update about when exactly are we thinking of doing it, and are there any issues that we may face from customer side? Will it be easy to move customers, low carbon customers to the new facility, or once the licensing arrangement gets done?
So, very important question, sir. In fact, just to update you, in the first quarter itself, we have been able to transfer some sales from Balaji and Bansal High Carbon into Bansal Wire. Within the second quarter, we have taken an initiative where we will consolidate Bansal Steel and Power fully within this quarter. And by third quarter, we are looking to consolidate all numbers from Balaji and Bansal High Carbon to Bansal Wire. But with that being said, the numbers have already started coming in Bansal Wire. The revenues, EBITDA, everything is being reflected in Bansal Wire to some extent. And every month we will see that more and more sales will be transferred. By the end of third quarter of this year, everything will be done. As far as customer goes, we have already been in touch with all customers. Wherever we needed approval, we have gotten approvals. Wherever it is pending, we will get within the next one quarter.
Understood. And on specialty side, you were speaking about some delays that you have seen. When exactly are we expecting the facility to become operational? How are you thinking about getting the qualifications, and by when should we actually commence commercial production?
So the delay for our capacity of specialty wire is because of the imports from China. We had some issues in container availability where the equipment's dispatch was pushed by about 30 days. Because of this, we see a 30-day delay in our process, although the containers have now started reaching our plant, so the installation is underway. So we do not see any further delay in this. As far as timelines are concerned, we are looking at starting production by November or December of this year. Commercial production, after all trials, successful trials and everything. And within the same month, we will also start selling the product. We will first look at hose wire, and then we will look at steel cord. Because in steel cord, we are looking at a 1-year approval process, practically from the customer, wherein in hose wire, we will be able to see revenues within the fourth quarter of this year.
Perfect. And my last question is on bead wires. When should we expect the capacity on the bead wires to be coming through? And is qualification going to be a time-consuming process for bead wires as well?
Bead wire as a product will also come either by the end of this quarter or maybe early next quarter. As far as approval goes, again, in bead wire, 50% of our sales will happen where we do not need a very long approval process. Therefore, we will be able to start supplying bead wire very soon. We should be about 40-50% of our capacity we can achieve without an approval process. In the other 50% of our capacity, it will take us up to 8 to 12 months to get the approval from our customers.
Perfect. That's very helpful. Thank you so much.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Hi. Good evening. So you mentioned about this specialty wire for margin expansion. So if you would also highlight some other key strategies for growth you are undertaking so as to better understand how to look at Bansal wire for the next 12 to 24 months. So if you can draw us a picture, that would be helpful.
So, sir, if you look at even our history of the company, we as a company have been growing, at about 20-25% every year. Because of this public issue, we are anticipating a better growth than we have been doing in the last 10 years, which is why you will see, even in this quarter, you will see that reflection. And this quarter, I would say, is only the start. Each and every quarter after this quarter, you should see better results, better revenue, better EBITDA. In fact, we are looking at about more than 80% growth in our EBITDA as compared to last year. At last year, we were at about 150 crore of EBITDA. We are looking at least 80% growth in that within this year. Majorly because of the new capex that we've already started, the Dadri facility, which will take our capacity from 2.5 lakh tons to 6 lakh tons. Because of which we have a lot of excess capacities to sell, and every month we are increasing our sales, we are increasing our production. This Dadri expansion will help us achieve a good growth in the next 2 to 3 years. With that, we are also looking at specialty wire. Specialty wire is a business in which our final plan is to make about 2 lakh tons. Looking at the current market, the current margin profiles of this product, we are looking at a 2,000 crore kind of a revenue from steel cord in the coming future, maybe 5 to 6 years down the line, in which the EBITDA percentage is also about 20-25%. So this is what specialty wire is. With that being said, all our three verticals, MS, high carbon and SS, will continue to grow at the same pace or a better pace than we have.
2,000 crore you said from steel cord over the next 5 years?
Yes. In that 2,000 crore, we are looking at 25% kind of a EBITDA.
25% EBITDA. Okay.
Apart from that, the current business will keep on growing. at minimum 20-25% that we have been doing in the last many years. And this year, we will see a better growth, about 70-80% growth as compared to last year.
That is on top line, EBITDA.
Sir, practically, as far as we look at our business, we look at majorly EBITDA, because top line again is a function of my raw material price. It is a commodity. Because of that fluctuation, revenue can differentiate. But in absolute EBITDA, it does not change because we follow cost plus model. Therefore, we are looking at least 70-80% jump for the whole year.
Okay, got it. Thank you for that elaborate answer. I'll get back in queue. Thank you and all the best.
Thank you. To ask a question, please press star and 1 now. The next question is from the line of Praful Kumar, Diamond Asia. Please go ahead.
Hi, Pranav. Am I audible?
Yes.
Okay. So, congratulations on a great listing and great first quarter. Just 2-3 questions here. First, how many SKUs are we currently?
So, we make more than 3,000 products, and we almost add new products by the week.
Every week. Okay. And that helps you to obviously maintain your margins and improve on them because of the wide bouquet of products that you have, correct?
Absolutely, sir. We today, by more than 3,000 products, we are serving around 5,000 customers. And this is one of the reasons why we have an 89% client retention ratio in our industry.
Fair enough. Okay, my second question is, we discussed this earlier. Can you tell us the measures that you are taking on the ROC front in terms of over the next, say, 2 to 4, 6 quarters? How should we look at any measures that you have taken to improve the return on capital employed in the business?
So, in fact, sir, this is a learning that we've had in the last 3 to 4 months throughout the whole IPO process, where we understood that ROC is a very important way to understand your business, which we did not earlier, to be honest. Now we have started focusing on good improvements. In fact, just to update you, the quarter ending June, our ROC from about 18.46% last year jumped to 23.85%. And we will see a positive impact on ROC every year. Our focus is to maintain at least 20-25% kind of a ROC level.
Sir, any measures in terms of on the balance sheet side, working capital, you can elaborate any receivable financing, any other tools that you are using incrementally that can help this? Obviously, this is a lot driven by operating leverage as well. Your margins have gone up, which will keep happening as you increase your utilization levels. But something structurally on the balance sheet side that you guys have initiated?
So, sir, we are actually taking a lot of initiatives on this to improve our ROC as well as to have a very positive cash flow from operations. What we understand is that our own capital in the business that we have put in so many years has been funded through debt. Now, in the coming years, we will reduce our own capital from the business, wherein you will see a decline in the trade receivables from us. We will have less debtors. We will have less stock, as well as in general, because the production increases. So, our overall working capital cycle will decrease as and when we scale up. So all of this combined, we will see a good impact, I would say, by the end of this year. We will see a very good impact on cash flow as well as
ROC. Fair. Now, that's great. Last question, Pranav, then I'll fall back in queue, is on this new project that you guys, with the machines have arrived. Now, what it needs to succeed in this, how big is this market? Who are the current players? What's your right to win here? More about your team, what team you have built in to understand that, you will succeed and maybe deliver 2,000 crores in next 3-4 years that you mentioned, with much higher EBITDA margins and ROCs. So broadly, something on this market, number of players, what market share you will have, and then a follow-up on that. Yeah.
Yeah, sure, sir. So, again, as far as specialty wire goes, the product that we are looking at is steel cord, which is the main focus area. Now, steel cord is a very interesting product for us because we are the first Indian company that will make this product. So today, this is a product that is basically being imported, and the rest is being serviced by a Belgium company called Bekaert, which they have a plant in Pune. And where they make it. But still 50-60% of the market of this product is being catered by imports. Now, within this financial year, we will be able to start our production. We will start selling hose wire and then steel cord. Steel cord, of course, requires a long approval process. And more than that, it is a highly technical product. So what we have done here is, today we have a very good team in place in the plant that has the technical expertise. We have also tied up with a lot of different vendors as far as the infrastructure goes. So we have the right infrastructure. We have tied up with a company that supplies that has more than 50% market share in supplying the equipments to make steel cord. And we have an exclusive agreement with them when it comes to India. So by all of this, I would say we have tried to do our best to have the right team in place, to have the right equipment in place, so that we can succeed in this. And because we have a first mover advantage, and today after COVID, I would say all customers have understood that they cannot rely on import. We see a very good traction in this product from the customers, which is the reason why they have reduced our approval process from 3 years to about 1.5 years. But within that 1.5 years, through hose wire, we will still be able to utilize our capacities.
Fair enough. Assuming this clicks in next 1.5 years, until then you make hose wire, I think it should not be a surprise to us that you deliver a 4-digit EBITDA in next 3 to 4 years. That's the aspiration I think you guys are working on. It's a fair assumption?
Practically, the market size for this product is about 2.5 lakh tons today, out of which 70,000 tons is being made by Bekaert. The rest is being imported. We are looking at setting up a 2 lakh ton facility for steel cord in phase manner, wherein the pilot project that we have set up is for a 20,000 ton capacity. As and when we get approval from our customers, we will start putting up the 200,000 ton facility. If and when we make 2 lakh tons, the EBITDA alone of 2 lakh tons would be about 700 to 800 crores, looking at the current prices. That combined with our existing business and the regular growth that we have, we should definitely look at a 4-digit EBITDA very soon.
Super. All the best, Pranav. Great. Wishing you luck to you and the team. Thank you.
Thank you very much. The next question is from the line of Anant Mundra from My Temple Capital. Please go ahead.
Hello. Thank you for the opportunity. So just a follow-up from what the earlier participant had asked, you mentioned that you want to take the steel cord business to 2 lakh tons. That's correct, right? That's the aspiration, and that would give you an EBITDA of about 700 to 800 crores.
Yes, sir.
But you also mentioned that we are planning to scale up the current. So with 20,000 tons, we can do about 2,000 crore of revenue, and with a 20 to 25% EBITDA margin. So that comes to around 400 to 500 crores. So, I mean, if I scale that 10x, it should ideally be 4,000 to 5,000 crores of EBITDA. So where am I being wrong in the math?
Yeah. So, sir, right now, from the 20,000 ton facility, we will be able to do an EBITDA of a revenue of about 300 crores.
Oh, okay.
From the 200,000 ton facility, the revenue will go up to 3,000 crores.
Okay.
But again, this will be done in a phased manner. So we will start with maybe 40,000 tons, and then every 4 months, every 6 months, we will keep on adding 40,000 tons to scale up to 200,000 tons. At 2 lakh tons, we will be able to do about 700 to 800 crore EBITDA.
Okay, and all of this you plan to do at the Dadri facility only?
No, sir. For this, we have already identified 2 locations. And the location that we will hopefully be choosing will be in Karnataka.
Okay. And you also mentioned
production is already set for third quarter of this year. After this, we are anticipating that within 3 to 6 months, we should be able to get a sample approval from the customers, on base of which we will start expanding for the steel cord facility also.
Okay. And you also mentioned that you have some kind of a tie-up with some company. I didn't understand. Is this some kind of a technology tie-up that you have to manufacture this product?
Sir, we have tied up for equipments. So the company that we have tied up with specializes in giving turnkey solutions to make steel cord, as far as the equipment and the infrastructure goes. So we have tied up with that company for India.
Okay, but there's no technology tie-up. It's just for equipment and making the plant.
For technology, we do not need any other tie-up because we already have about 20-25 very senior, experienced people with us for steel cord.
Got it. Okay. So also, out of the current 3.5 lakh tons that you're planning to expand in Dadri, 20,000 is for steel cord. Can you give us an idea of how big is? So there are other specialty products also that you're planning, right? You mentioned hose wire, and then I think I remember seeing IHT, OHT wires, and other things. So can you give us the size of that as well?
So, sir, as far as 20,000 goes, this is all steel cord. But because it will take us about 1 to 1.5 years to get the approval and ramp up our capacity, for that 1.5 years, we will not sit idle. We will, in that same infrastructure, we will make hose wire, which is a product in which, as compared to steel cord, where we see 20-25% EBITDA, here we see about 15 to 20% EBITDA. So it is more like a byproduct of steel cord, which we will start producing because it does not need any approval process. Because of which we will be able to reach a capacity utilization even in this infrastructure. Apart from that, we are looking at IHT and OHT wires, wherein we have allocated about 8 to 10,000 tons capacity in IHT, OHT wire. This is a product that is used in all electric vehicles. And this also we will be starting by next year.
Okay. So the hose wire, so once the steel cord facility comes online, the hose wire will, it's just an interim thing that you're doing right now, or hose wire will continue even after the steel cord facility comes online?
When steel cord comes online, we will also be able to start the new manufacturing plant where we will scale to 2 lakh tons. In that manufacturing plant, again, we will start from hose wire and then gradually go to steel cord.
Okay. Got it. Great.
So as when steel cord comes online, we will have a new plant to make hose wire.
Okay. Got it. That's great. So also currently we are doing, so this quarter we've done about 76,000 tons, and out of that 6,000 is from the new facility. So the existing facility is doing about 70,000, but its capacity is just 2.5 lakh tons, whereas we are currently functioning at a run rate of 2.8 lakh tons. So this extra 30,000 tons is coming from where?
So this has come from Bansal High Carbon and Balaji Wires. So these are the 2 other group companies which we have to take on lease within this year. But we don't want to wait for that. We did not want to wait for that. Therefore, whatever working capital we had, we at least started a job work arrangement with these 2 companies, so that at least the numbers are consolidated as soon as possible.
Okay, and in I think a couple of quarters down the line.
May we please request you to come back in the queue for the follow-up question?
Thank you.
Thank you. The next question is from the line of Aditya Shah from Meteor Wealth Management. Please go ahead.
Hello, sir. So my first question is, can you shed some light on the cost-plus model?
Sure, sir. So, as you can see from our numbers also, sir, we operate in an industry wherein percentage of margin is not, very attractive as like a 10%, 20%, 30% margin. And our raw material is a commodity. Therefore, to make ourselves kind of immune from the commodity fluctuation, we have been able to achieve a cost plus model. So now what we do here is basically whatever raw material I get, I am able to transfer my prices to my customers on the very same day. For example, for us we have two different raw materials, steel and stainless steel. Steel is a commodity wherein the prices are changed every month. So every month by second or third of the month we get to know the new pricing, and accordingly we change our price list and our new orders are booked at the new prices. Similarly, in stainless steel, it is a more volatile commodity. So whenever there is a change in my raw material price, we also change our finished prices. Apart from that, any inventory that we have, we target about 80-85% of our inventory should always be sold with confirmed orders, so that we do not carry any risk of commodity in our business model, which is the main reason why we've been able to maintain a very stable EBITDA margin throughout, whether you look at the last 10, 20 or 30 years. And this is the model which we rely on even for the future.
Okay, sir. So can you shed some light or some names have you clients you've onboarded internationally and domestically?
So I do not have such information right now. But overall, what I can say is that there is no one major client that I would be able to name. Out of the 5,000 customers, there is no customer today for me where I sell more than 5% of my sales to. So I have a very decentralized customer base. I have no dependency on any single customer or any single industry. Therefore, there is no one significant customer.
Okay, sir. And my last question is just that what is your capex for your Dadri plant?
So Dadri plant, the total capex for this project is 500 crores.
And you will complete it by
already established. Yeah. So out of the 500 crores, we had already spent 250 crores last year, and the balance will be spent within this year. By the end of this year, we will be able to have the full plant on stream.
Oh, okay, sir. That was it from my side. I'll follow you.
Thank you.
Thank you so much. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. So my first question is regarding the specialty steel wire facility. So what would be the capex of this particular facility that you mentioned has a capacity of 20,000 ton per annum?
Sir, right now for this 20,000 tons, we have spent about 150 crores of capex, which is very low as per the industry standard, because this is part of a very big facility of a 3.5 lakh ton campus. When we make a new facility for steel cord, our capex will increase by about 40%.
So what would be the capex for the whole 200,000 ton facility?
We are looking at a 2,500 crore investment for a 2 lakh ton facility to be done in a phased manner.
Yeah, and this would be phased out in 3 to 4 years.
Sir, it all depends on how quickly I'm able to ramp up my capacity, how quickly I'm able to get customer approvals. But yes, from the looks of it, we are targeting about 5 years to have this facility up and running.
Okay. And my next question is regarding our raw material. So where do we source our raw material from, and what is the concentration of top 5 suppliers?
Sir, again, I would say one good thing that we have been able to do in our business is achieve diversity, whether it is in my supplier, my customer, my products. In every case, we have tried to de-risk ourselves from any one major player. Therefore, even in my raw material, we buy raw material from all main sources. For example, Tata, Jindal, RENL, SAIL, all steel companies and all stainless steel companies.
Okay, understood. And my last question is regarding our volume guidance for FY'25.
Sir, what I would say here is that we've already achieved 76,000 tons for the first quarter, and we are looking at better volumes and better EBITDA each and every quarter. My second quarter should be better than the first, third should be better than the second, and fourth should be better than the third.
Okay. Thank you, sir, and thank you. All the best for your future quarter.
Thanks a lot.
Thank you. The next question is from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, Pranav. Just a follow-up question. Would you be having details on how exactly your cash flows have been in first quarter, and what our cash and debt balance would be after first quarter?
So what I can give you is, sir, the net cash generated is a negative of 41 crores for the first quarter. And this is because of the investment in our Dadri facility. To start our production, the initial level of stocks, the initial level of, customer debtors, all of that has been created. Therefore, we've invested about 80 crores last year extra in inventory because of the Dadri facility.
Sorry, 80 crores of investment in inventory?
In inventory we've done for the Dadri facility, because to ramp up capacities we need certain, initial level of inventory everywhere.
Would we be having the broad working capital details at the end of Q1?
So as far as working capital goes, we were maintaining a 70-day working capital cycle.
Hello?
In which 40 days, we were maintaining a 70-day working capital cycle in which the inventory days were about 40 days and trade receivables were 43, and then we had some payables of 12 days.
Understood. This at the end of first quarter, right?
End of first quarter.
Perfect. That's helpful. Thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Saili More from Individual Investment. Please go ahead.
Hello. Hello.
Yes, ma'am. We can hear you.
Yeah. So what are the overall utilization rates for your manufacturing? May I know this?
So, ma'am, all our other 4 manufacturing facilities were running at about, optimum utilization at about 88, 89, 90% kind of a capacity utilization. Whereas the Dadri facility, now this is a plant where, every day we have more and more capacities.
Okay.
But what I can say is by the end of this year, we will be able to achieve 3.5 lakh ton capacity. If I take that base that we will achieve by the end of this year, we have already produced 12-13% of that in the last month, which is June.
Okay. And one more question I had about the exceptional item which is showing on your books. So can you explain what is that regarding?
I would request our CFO, Mr. Ghanshyam, to take this question.
Yes, please. Sure.
Yeah, madam. Last year there was some short-term investment in some other company, and from that we have got some capital gain. We have disinvested from that, and the second that the company was having an additional plot that has been sold. And because of that, there is exceptional income is there.
Okay. Fine. Thank you.
Thank you.
Thank you, ma'am.
The next question is from the line of Pradeep Rawat, Yogya Capital. Please go ahead.
Yeah, thank you for the follow-up. So my first question is regarding our current peak revenue potential. So once our facility is fully ramped up, so what would be the peak revenue potential from all the facilities?
Sir, once the Dadri is fully ramped up, as far as revenue goes, if you look at the current commodity pricing, I would say that we should be able to achieve about 5,000 crores of revenue at peak.
Okay. And can you shed some light on the recent acquisition that we have completed of Bansal and Steel Power Limited?
So Bansal Steel and Power it was a group company that we had acquired 76% of last year. And as per our conversations, the remaining 24% was to be acquired this year, which we have now successfully done. I would request our CFO, Mr. Ghanshyam Gujrati, to give some more details of the acquisition.
In the current year, we are acquiring this remaining 23.85% by investing around 43 crores, and the company will provide out 100%. It will become the wholly owned subsidiary company. And previous year we were having 54 crores invested. Total overall we are having about 95 crores, and the EBITDA of that company is subsidiary company is around 60 crores.
60 crore of EBITDA, right?
Yeah. That's subsidiary company. And the total overall cost would be around 95 crores.
Okay, understood. And my last question is regarding, so do we have any plan to raise further capital in coming, let's say, 1-2 years?
So, sir, looking at the current position, the current projects that we have lined up, we do not see the company needing much cash because we are at a good run rate for EBITDA. Every year, we are growing at a good pace. So all our capex plans for the next many years we should be able to do with our own accruals, whether it is steel cord or any other thing.
Okay, understood. Thank you.
Thank you very much. The next question is from the line of Anant Mundra by Temple Capital. Please go ahead.
Hello. Thank you for the opportunity again. Sir, could you highlight what is the fungibility of the installed equipment across the 3 verticals that you are present in?
So, sir, in fact, this fungibility is a very important thing in our business. I would like to explain to you that first, even in the 3 verticals, there are a lot of different products. For example, in high carbon wires, we would have about 1,500 SKUs that we make. So the main fungibility for us lies between that SKU. Wherein in high carbon, if we are making products for automotive, we can also switch to consumer durables or infrastructure whenever required. Because of which we have always been able to maintain a very stable capacity utilization and a very high capacity utilization. Now, when it comes to inter-vertical, I would say that the fungibility there would be about 10%. But to be very honest with you, in the last 85 years of our business, we have never had to use this. Oh. We are always able to manage within the existing fungibility of within the vertical.
Okay. And out of the current production that we are doing, is there any specialty product that you are making, or everything is only in the future pipeline?
So, sir, there are a lot of different products that we are making. A lot of them giving us 25-30% EBITDA also, and a lot of products that give us 2 or 3% EBITDA also. So we already have a very good mix of high EBITDA and high volume products. The specialty wire vertical is a new vertical only catered majorly for steel cord, because we want to focus on that product separately and not included within the current 3 verticals that we have.
Okay. And also, last question is, could you give me what is the current gross debt and the net debt as at the end of Q1?
Yeah. Ghanshyamji, can you take this question, please?
Yes, sir. Yeah. Hello. Yes, sir. The total debt is around 800. And the net debt would be around almost, it is like that. It is equal to that 800 around.
Sorry, I missed. What is the net debt?
Total net debt is equal to, we don't have any surplus money, and the net debt is around 816 crore.
Okay. All right. That's it from mine. Thank you.
Thank you. The next question is from the line of Deep Mehta, Bank of India Mutual Fund. Please go ahead.
Just one quick follow-up. What can be the margin potential for hose wire segment, and do we need any special permission to sell that product?
For hose wire, the reason why we are putting up that product is because we want to utilize our capacity from day one, and because hose wire does not have any capacity as any approval process. So that is that. As far as margin is concerned, I would say it is about 10 to 20% lower than steel cord. So, for example, if steel cord is at 100 rupee per kg margin, it would be at about 80 to 90 rupee a kg margin.
Thank you, sir. And because we don't require much permissions, we can quickly ramp it up to 20,000 tons, correct?
Absolutely, sir.
Okay, sir. That's all from me.
Thank you very much. To ask a question, please press star and 1 now. The next question is from the line of Jaimin Shah, Indes Securities Finance Limited. Please go ahead.
Hi, sir. Thank you so much for this opportunity. I just wanted to know that you said that you have a pilot project of 20,000 metric tons and you wish to take it to 2 lakh tons. How much years will it take?
So the total that we are looking at is about 5 years to take it from 20,000 to 2 lakh tons. It could be a little sooner depending on the approval and the ramp up that we are able to do. So because we make most of our equipments also in-house, it does not take us time to scale up capacities. So whenever we see demand, we are able to scale up in a matter of 4 to 6 months.
And
therefore,
what is the
it will all
that you're going to
depend
do
on what we are able to do.
And the capex that you're going to do in this 5 years? Total capex for specialty wire?
So only for steel cord, for the 200,000 ton facility, we will have to invest 2,500 crores.
Okay, this is in 5 years, right?
Yes.
And also, if you could just explain the arrangement that you have with Bansal, High Carbon and Balaji wires and the timeline that you mentioned with regards to the to a previous participant that you mentioned.
So, sir, as I explained before, first, Balaji and Bansal High Carbon are 2 group companies that are manufacturing similar products as Bansal wire. Therefore, the plan is to shut them down and have all the sales come in Bansal wire. To do that, we have already started a job work agreement with these 2 companies, and within the 3rd quarter, we will take these 2 companies on lease. So these 2 companies, they did about 40 crores of EBITDA last year. We are paying them about 6.5 crore per year, both combined, to take this complete revenue and EBITDA in Bansal wire, which will happen till about 1.5 years. We will have to do this. By that time, we will already have capacities available in Dadari, where we will be able to sell and produce these products. Okay. So within 1.5 years, we will be able to shut them down completely.
Okay, understood. Thank you, sir. Thank you.
Thank you very much. Ladies and gentlemen, the next question will be the last question. The next question is from the line of Mr. Dipesh from Invesco. Please go ahead.
Yeah, hi, Pranav. Thanks for taking the questions. Sir, the 76,000 tons volume that you gave, right? Can you help me with the mix in the high carbon, low carbon stainless steel for this quarter?
Sure, sir. So high carbon, sir, was about 27,000 tons.
Okay.
Mild steel was 28,000 tons, and stainless steel was 21,000 tons.
Okay. And if we leave the specialty facility that is going to come, how do you think this mix will be for this year and the next year? It totally depends on demand, or you have anything visibility on that?
Yeah. So for each and every product, we will see a significant growth. But definitely, mild steel will be a product that you will see a significant change in, because this is the product that is being produced by the 2 companies called Balaji and Bansal High Carbon, which will come in Bansal wire. Therefore, including those sales, we will see a better number in mild steel. But overall, each and every product, whether it is high carbon, mild steel and stainless steel, we will see a good quantity ramp up. In the last quarter also, we have done 140% increase in our capacities year on year. And even on a quarterly basis, we've increased our volume by about 14%.
Got it. And the 6 lakh, the capacity that you're targeting for the end of the year, just wanted to understand what is the capacity right now, annualized capacity, and how it is going to ramp up over the year?
So by the starting, from the starting of this year, we had a capacity of 2.5 lakh tons.
Correct.
And within this quarter, we have been able to ramp up some capacities in Dadri by 13%. And every day, as I said, we are trying our best to add more and more production to meet the demand from our customers. Therefore, we are looking at a good capacity ramp up almost every month from here. This is the reason why I am able to say that the EBITDA that we are generating this quarter, I think, is only the start.
Got it. Thanks, Pranav, and all the best. Thank you. Yeah.
Thank you very much.
Thank you. Thank you, everyone.
I would now like to hand over the call to Mr. Ghanshyam Gujrati for closing comments.
Thank you very much, Deepika. I would like to thank to all my investors for joining our call today. It was a pleasure discussing our first quarter performance. We continue to focus on diversity of our revenue and geographical base, the expansion of production capacity in current year, and our expansion plan will provide a boost to our financial performance in financial year 26 as we work towards improvement in value accretion to the shareholder. For any query, you can either reach out to us directly or connect to our IR team at 8 Factor. We would be very happy to provide any details that you require. Thank you very much again for joining the call. Thank you, investors.
On behalf of Bansal Wire Industries Limited, that concludes this conference. For any queries, you can connect with Adfactors IR team. Thank you for joining us, and you may now disconnect your lines.